If you're moving permanently to India from Canada, this video is for you. You'll get to know what all you need to do in Canada and India so you don't end up in mess of taxation. When you are in Canada, you're sure to have bank account, you might have investment like TFSA, RRSP, you might have childcare benefit, for sure you'll have mobile phone, you might have mortgage, line of credit, and the list is endless. Why leaving Canada, you could have different scenarios like family moves first and then you wrap up and you move. Or you may entirely move with family, and in both scenarios, there are things to keep in mind. First is to get hold of a good CPA in Canada who understand the departure taxation with CRA, and in India, CA who had knowledge of immigration. If you get a CA in India who knows both Canada and India, you will be in good hand. But the challenge is getting one who knows both well. And for you, this is going to be a tough job in hand. There are many Indian CAs with good experience who moved to Canada and now they have done their CPA, they're practicing. They could be one option here in this case. You and your family will have to file departure tax return in Canada where your departure date will be mentioned. If all are going together, the date will be same. If not, the date you individually leave will be the departure date. If you have a taxable asset, first thing to do is to make a checklist of everything so there is no room for error. For example, you own a home, which is your primary residence, investments such as stocks, bond, mutual funds, interest, dividends, capital gain, credit card, any line of credit that you have, outstanding payment, rent if any. If you own a business and has any asset like equipment, inventory, income generated from sale, a registered account, which most of us will have, which are taxable upon withdrawal, for example, RRSP. Now, TFSA is not taxed on withdrawal under specific condition. You might also be holding cryptocurrency, for example, if you're holding it in say, neuter. Anything that is taxable and money has to be paid will have to be done with this departure tax filing. If you have any taxable asset from the above, then this form T1161 and T1243 for departure tax will have to be done as part of your last personal tax return. The departure tax is a deemed disposition of your taxable investment account, meaning that act of selling everything the day you may leave and rebuying immediately. Think this as capital gain tax. This is the reason I said at start, get a good CPA beforehand who will handhold and make this a smooth experience. You will also have to notify bank, brokerages if you have, that you are non-resident with your new address. Some bank and brokerages don't allow non-resident to keep account. For example, Wealthsimple does not allow. This conversation with bank and brokerage is going to help you plan closure, changing status as non-resident by filling a form, moving money, etc. in advance. Many try to keep their bank account in Canada as a non-resident by filling a form. If you have option, close it. Any money you will have in your account will have to be liquidated. You will also need to check which exchange will give you a favorable rate much in advance so that the currency that you're converting from Canadian dollar to Indian rupees, you get a good rate and it gives good adequate time for you to do this research. Now, if you're expecting tax refund from CRA, in that case, you might want to keep one Canadian bank account active. And you will want to check this with bank how closure would happen while you are away. If your Canadian bank account remains active, even as a non-resident, and any interest that you get on money that you have kept, you will get T5. So you will now deal with filing taxes in Canada and also reporting in India, which will make it complicated as you will get to know. Any money that is liquidated might be taxable in India, so you must have a good CA who understand immigrating to India. Also, you will have to file Indian tax return on worldwide income from the date you land in India. Now remember, there's a different tax cycle which India has, April to March, and Canada follows January to December. India taxes on investment income and capital gain inside account like TFSA, RESP, and FHSA. So it's important that you must close it before you leave Canada. Also, you will have to report all investment income from Canada to India. Now, India taxes TFSA dividends, interest, and capital gain, as I said, because it is not a registered tax shelter for Indian tax resident. With regard to RRSP, this is taxable on withdrawal here in Canada. So you would know this for sure. Once you have filed departure tax, you will report the interest on dividend and capital gain to India. You will also have 25% of the investment income withheld by brokerages and remitted to CRA. You can claim that income tax to India as foreign tax credit. I'm sure you won't forget to cancel your health insurance, any other insurance for that matter, if you're permanently moving. You need not have a Canadian phone number to connect with CRA. My friend who moved permanently updated his email with CRA and gets the communication. So you can have this conversation with CRA to know how this is possible. One more thing to note on RNOR, which is for resident but not ordinarily resident. This is special category in between resident and a non-resident in India. An individual is considered RNOR if they are a resident, meaning they stay in India for a certain period during the year, but they do not fulfill the usual condition for being considered an ordinarily resident. When you move to India, tax dividend will be added to your income and capital gain less than 2 years, which is at rate of 12.5%, or it might have changed after RNOR expires. That's why, to make it simple, best is to liquidate everything and remain stress-free. Some still consider keeping account like TFSA open, but not contribute as non-resident. They still carry out trade with what is there within this RNOR period. But the hassle they will have is only known to them when the status changes and they don't come openly and tell what has happened to them. One last thing from your organization, get relieving document. Remember, you're getting into Indian system where such documents are necessary if you're not moving into the same organization. So you have some insight now on what to do. Have a detailed conversation with a good CA and CPA, get everything sorted out and have a peace of mind. That's important in life. Thanks for watching Canada Tried and Tested.